Home buying tips is what we're talking about today. Welcome back to my channel. If we haven't met yet, I'm Esphir Popilevsky with Supreme Home Sales. Please subscribe and click on the notification bell. And today I have 5 tips for you. Tips for home buyers, what you need to do before you buy a house. Let's get right to it. First of all, stop being afraid to file and complete a mortgage application. Go talk to a mortgage broker, talk to a bank. Don't be afraid. Even if you're not ready to buy a house yet, you will get to know what a lender would lend you, what is your credit score, and what is your DTI, which is debt to income ratio. Tip number 2, know your credit score. Credit score is going to be a big player and determine exactly what your mortgage rate is going to be. In the event that you need to do some repairs on your credit score to raise it up, there's a video up here you can watch about credit scores as well and how to repair credit scores. So that's really important. Make sure that you know your credit score. The higher the credit score, the lower the mortgage rate. Number 3 is knowing what a mortgage lender, whether it's a bank or a mortgage broker, will lend you to purchase a home. Knowing the mortgage amount you can borrow will help you determine how much down payment you need. The down payments that are available for you to utilize are the minimum down payment that any loan, whether it's an FHA loan or a conventional loan, would allow you is a minimum of 3.5% down. You could do 5%, you could do 10%, you could do 15%, 20%, and whatever more than that. But the key thing to remember is the minimum, absolute minimum down payment you're gonna have to come up with is 3.5% down. I did a video about FHA conventional loans and what the difference between the two. This is a video you would wanna watch as well to give you a better idea about mortgages. So knowing what a bank will lend you, understanding where your down payment needs to be, you will then understand exactly how much house you can afford. Number 4 is know your DTI, debt to income ratio. Now, your debt is going to play a big role into how much a bank is going to be willing to lend you. So the lower debt that you have, obviously, the more money a bank is going to lend you. But also, you might be in a situation where your debt to income is so high that you're not going to be able to qualify for a mortgage. Just so you know, debt is really things that you borrow. So anything that's on your credit card, any financing that you have on vehicles or student loans, not your utilities. Your utilities are not part of the debt to income ratio. Knowing your debt to income ratio will give you enough time to make any adjustments or corrections if you need to lower the debt to income ratio. So knowing that ahead of time is a huge advantage. Number 5 is understand that there's also closing costs that are involved in purchasing a house. So on top of your down payment, there would be additional fees that you would be required to pay out of pocket. Knowing those fees are very helpful for you to be able to prepare ahead of time for saving for the down payment and saving the extra money that you're gonna need for closing costs. An example of closing costs are, first of all, your mortgage tax. There's a mortgage tax on the money that you borrow. So whatever the amount of the money you borrow, you will have a mortgage tax, which is going to be a part of your closing costs. The next item that is going to be in the closing costs would be a title insurance policy. Title insurance policy will make sure that when you're purchasing a house, the house is purchased with a clean title, free of any liens or judgments. Included in the closing costs would be an attorney fee. You would have to hire an attorney to represent your best interest at the closing, and they obviously going to have a fee that they charge for their services. along with recording fees to record the deed that you are the new owner of the property. There's also homeowners insurance that's going to be part of the closing costs. And it's important to know that with purchasing a home, you will be responsible to a property tax payment on an annual basis or a monthly basis. When you are purchasing or getting ready to buy your first home, it is very important for you to understand that those things need to be in place to help you make an intelligent decision and put you in the driver's seat in order to be able to buy a house that you really want to buy in the near future or the far. I would also recommend that you use a real estate agent that is going to be working on your side, especially when you're buying your house for the first time, and going to walk you through the process every step of the way. Make comments below and let me know if you have any more questions. I take pride in answering all the comments, or if you want to just give me a like because the video was helpful to you, and I will see you in the next video.